Hi, welcome to the Market Alert for Friday, the 4th of April 2025. So stock markets drop sharply after Trump tariffs, with two indices recording worst day since COVID. And we're in the middle of a dramatic market regime change. Deutsche feels dollar confidence crisis. Well, Trump wants the dollar a lot weaker than it currently is, so he's getting his wish. It's a train wreck everywhere. Tariffs and terrible data prompt panic across global markets. And US stocks suffered their worst day since 2020 amid Trump tariff turmoil. And finally, stocks see worst day since 2020 in the wake of Liberation Day. It's no liberation, as for certain, but what an absolute catastrophe. As I've said in the Market Alert for weeks now, that this tariff thing is a bad business. It's only going to be passed on to the end user and collect a few taxes along the way. Anyway, other economic news today, got from the UK construction PMI, hourly average earnings, non-farm payrolls. It's Friday. This would be a big news thing, but it's not anymore. Not after yesterday. Unemployment rate. Powell is going to be speaking at 4:25. He's not a Trump fan. And FOMC Weber Waller speaks as well at 5:45. So expect a bit more volatility today. And probably a slight recovery for the markets until the Dow opens at 2:30. So let's have a look at the carnage and kick off with the Dow. So in the Dow, you can see there yesterday another down day. We've got the markets taking out the 78, 89, heading for 40,000. This is going to be a key area for the Dow, 40,000. We've got an all-time high up here. If we just have a look of 45,000, so you can see there 45,066, so we've nearly lost 5,000 points on the Dow. If we look at the monthly chart though, it's lost absolutely nothing by comparison. If we go back to even to the last low here, this is October 23, market piled on all of those points. All of the stock markets are seriously overvalued, so there's no great shakes about what you're seeing with the stock markets at the moment with this. It's just how long it's going to continue, or whether the plunge protection team come back in and start supporting the market. But yesterday, you can see the market down. It was down in the morning. It was accelerated to the downside at the S1. Market was brought back 89%. You can see that there, and then sailed lower. But at the moment, it's trying to get back above yesterday's low, which the German DAX is currently doing also. So let's have a look at that as well. So in the German DAX, more of a side-by-side day, really. Yesterday, the market holding at Wednesday's low, and then also buying coming into the market as well. Let's have a look at the 30-minute chart, and there you'll see we started off well to the upside, as I mentioned in yesterday's alert. So be careful of the bounce, the dead cat bounce as it's known, and then the market then followed the US futures. But you can see there, the moment trying to get back above the low and the close. So you could see a bit of a reprieve, particularly when you look at the daily charts, move back towards the upside. That said, normally you get a situation where you get a shakeout and then the pullback, and then we go. So it's unusual for the market just to do this. So be on the alert for any sort of shakeout to the downside, and also the next downside target, which is down here. We're at 78% at the moment, and 89 could be an area that is tested as well. And in the S&P, also yesterday, an interesting observation here is that we're actually seeing demand come into the market as far as this is concerned. We did break the 5,504 the day before, and the market holding quite nicely there. Again, in the monthly charts, we've not lost an awful lot at all. The 20-bar moving average is the next downside target for this. And the UK market barely moved yesterday, but did take out the 8461 overnight. So again, not too much of a concern there. Again, you can see prices finding support at the low, and this could be the catalyst for a reversal. We've got the non-farm payrolls as well. They only have to come out better than forecast, and we get a straight reversal on yesterday's panic and action. I mean, also don't forget, traders will use this. The institutions will take advantage of things like tariffs and slam prices so they can buy back cheap, get people to go short, take out the stops if they're long, and also offload their stocks at a cheaper price as well, knowing full well that it's not going to make any difference with regards to the tariffs. So unfortunately it is, but it doesn't matter because I'll have time to reverse the situation before they really start to impact on the economy. So have a look at the US dollar, and this was hammered lower, where you can see that now we've taken out that 103 support that we've had for weeks. That was taken out on yesterday in style, and overnight there's further weakness. Trump wants a weaker dollar and he wants lower interest rates to go along with his tariffs, so this is another reason. But of course, what nobody's told you in the media is, let's just have a look at the metals and I'll fill you in, is that bullion is exempt from tariffs. So what we've got here is a situation now where the banks have got full control once again of the shorts in silver, which is why you saw it monkey hammered yesterday, down 7% at one point, and down again on the overnight, although there seems to be some buying coming into the market at this level. Wouldn't surprise me. There is still a deficit of silver. There is also massive demand with the net zero nonsense in India and China. So don't be surprised if you see this finding support here today. That said, it's Smackdown Friday. So again, let me just get the right 30-minute chart. There we go. I was going to say that was impressive for the bankers. So yesterday down, a bit of a reprieve, then down again, and at the moment we're starting to see a bit of support coming into the market and trying to get back above yesterday's low. But it's Friday. Maybe the Smackdown came a day early and it's yesterday, and we see the market find support and hold support in the daily chart there at the 78%. But what's more important is 89 and the 200 MA. We could have a run down to this level, which is 31.21. Wouldn't surprise me one bit. And then that's where its bottom is going to be, a bit like what we saw here before. Massive day down, corruption across the board. The dollar's down, so silver down, and so was gold yesterday as well. Just used as a way of shaking people out, but you can see gold's holding really firm. And yesterday, of course, they managed to bring it back at one point, and it's now found support once more and starting to move back to the upside as well. So, like I say, you can expect the stock markets to start moving up, certainly in the pre-market session. But let's have a look at the gold-silver ratio. Spectacular price action in this yesterday. So there, it doesn't look impressive there. This is a monthly view. There's your COVID high of 126, and the market sitting at 98. It may get up to, I'll just do this for you, and let's just make it wider. And there you go. So now you can see how impressive yesterday's move was. We actually have a look at the daily chart. It's even more impressive. But I've spoken about this all week, wanting to break through. That's why we drew the lines in. It went straight through the 96 level that we were talking about. 100 is on the cards. Let me just get rid of that. 100 is on the cards just for probably just to hit it and then come off it, just to get back to that. But we are seeing some sort of possible potential bottom there in silver. But today is Smackdown Friday, and like I say, we've got to possibly go down just to that 31 area. There we go, 31.12. It wouldn't take a lot to smack down to that level, so watch it, and hopefully there'll be support at that level and area there. Right, let's have a quick look at yesterday's market volatility. And as I mentioned in yesterday morning's alerts and also this morning's, the market is likely to move back to the upside. As you can see there, that's what it did from the off. Then we saw the market come in and it was just up and down as they tried to decide what to do. One warning, make sure you check the spread of the market at the moment. So yesterday the German DAX with Trade Nation and a few others moved it to a floating spread, and it was 8 points. That doesn't make it possible. The 2-minute trade, if you're taking small scalps, you're not going to make any money with it. If you've got to do any trades at the moment, if the spread is still 8 points, then you need to make sure that you can let the trade run or move to a higher time frame. Yesterday you can see there the Carnage as the market was forced lower down to the close and then back towards the DP. Today's going to be a lot calmer and more directional. Afternoon market moving up. A lot of these bars, 30, 40 points down to the close of Wednesday, and then just trading sideways there later on. Until the market can see the effects of these tariffs, then you can expect the volatility to continue, and also the price of gold to also continue to move higher as well. Right, so that's it for this one and for this week. So have a great weekend. Don't forget the NFP numbers are likely to use those. Expect a bit of rally to start with, but then we'll see what happens. And also watch silver at 1:30 to 2:30 p.m. Right, that's it for this one. Like I say, have a great weekend. And as ever, thanks for watching. See you in the next one.